Doug says, in a Power Options portfolio, what is the best proper way to close an in-the-money covered call position at expiration? Call expires, stock is called away. Okay, so in the Power Options portfolio tools, you can easily track and manage your positions. Let's go ahead and create a portfolio from scratch. We did this last week, but we're going to go ahead and set up just a basic portfolio. And when you start out with a portfolio, this is the only line you would see. If you're just starting off on your trial, you just see this basic view, this one line for new portfolio. Let's go ahead and call it July 7th presentation. Now, if I have a trading account, which we all do, but I just joined Power Options and I'm looking to mimic what's in my trading account. And I have some stocks open, married puts open, covered calls open, as Doug mentioned. Maybe I have some spread trades, some long calls. I look at my total portfolio value at my brokerage, which includes my existing cash on hand that I have buying power, if you want to call it that way, in addition to if I liquidated every position, what is my total portfolio value? Let's say that it's at about $65,000 for what I'm using with options. So what I'm going to do is start off with a cash on hand of $65,000, and I'm going to copy that directly over to the starting basis. And let's just go back in time and say that we created this portfolio on June 15th. All right, so I save all changes. Now if I go into the main portfolio view, where we track and manage our positions, it'll link me directly to that new July 7th presentation. Starting basis is equal to the cash on hand, which is roughly equal to my total portfolio value, including all liquidation of open positions and my buying power that I have at the time. The reason why is because now I start adding my existing positions, and what's going to happen is that's going to take away from my cash on hand to be more of a pure reflection of what my portfolio is. In other words, I didn't want to create the portfolio saying, oh, I only have $7,500 cash on hand. I started with $65,000 and then add my positions in, because I'd end up with a negative cash on hand basis. You want to start those out equal. Very well. Now let's take a look at Fortinet. It's just one of the myriad puts I'm in. I know that's been up and down. So is NEM. They've both worked out well for me. And we're just going to go to the quotes page very quickly. And we're going to go ahead and take a look at big charts. Fortinet had a pullback. Let's see here. Where are we? Yeah, right around the 15th. That's why I kind of selected that. Around the 16th or the 17th, it was trading at 71. And it moved up to 76, pulled down a little, and then back up to 75. Let's say around the 16th and the 17th, we bought Fortinet at 71.50, for example. And at the same time, for some premium, we sold a 72 or 73 straight call for today's expiration. I do believe Fortinet has weekly options, so we'll be able to take a look at that. Now, before I enter the historical trade into our portfolio, let's just be exact as possible. I'm going to go to the option chain for Fortinet, and we're going to go back. On your trial, on a 14-day free trial, you have access to 3 months of data. Let's go back to the 20th. Okay, the 16th was standard expiration. Maybe we should use that date, but yeah, let's use the 20th. Stock was trading at 71.66. Our July 7th expiration chain at that time, very nice. Our 72 strike was at 165 midpoint. Let's go ahead and use that as our premium for a 17-day trade opened on June 20th. Now, do I want to enter the long stock position and enter a short call? No, I want to track this as a linked position to have a better view of the total value of the linked position as opposed to just the profit and loss on the stock leg and the profit and loss on the call leg. So I'm going to select that I'm entering this as a covered call position. So, sorry about that. Let's put in Fortinet. We're going to keep it simple. Actually, well, yeah, let's do 400 shares. And I'm sorry, I said the 20th of June. And our price per share, we said was 71.66. We're not going to include a commission fee just to keep the math simple. And we are going to sell the July 7th, which is now in the money, 72 strike call, even it up to be the 20th, and we received a premium of 165. Well, let's go ahead and submit that. Now you see here, we're tracking it as a linked covered call position. We do see the individual gain on the stock and gain or loss on the option compared to the original price and what the buyback cost would be today. The original expected gain or loss was 2.8% if assigned. Liquidation, of course, today was 2.8%. If we still had a week to go, if this was the 14th of July expiration, we might only be at a 2.1 or 1.8% return. And we see that our future expiration value, if the stock remains at the same price, would give us that 2.8% return. This is the stock analysis view. This is the view I like to use when tracking credit spreads, debit spreads, calendar spreads, things of that nature, linked positions, multi-leg strategies, because it gives me that breakdown of original position cost. Original expected gain or loss, maximum profit, if everything works out the way I expected. And as the trade goes on, my liquidation gain in value as the stocks and options fluctuate in price. And then if the stock remains at the same price through my expiration date, what is the difference there? Now, of course, what I might have done is set alerts on this position to be notified if I didn't want to be assigned, if it was in the money or the price changed. I would set the alerts here in the alerts column. I would just click on view. And I may have set alerts if the stock has moved up above, we collected 165. So let's say if it moved above 72.75, I wanted to avoid assignment and keep the trade. Maybe I'd go ahead and mark that. But you can set other alerts for the percentage stock change, option percent change, ask limit on the call option, days remaining to expiration, delta, lower or upper, range in the money, total position percent change, positive or negative, and some stock alerts as well. If the stock's trading above or below a 20-day, 50-day, or 100-day moving average, Bollinger Band, days remaining till earnings, days until ex-dividend, if the stock hits a new 52-week high or new 52-week low as well. It's going to keep it simple and use that stock alert. All right, so it shows me here on the upper stock limit of 72.75. Fortinet, of course, is 74.68. So my alert is triggered. When my alert's triggered, I would do that. If I wanted to evaluate rollout opportunities, I would go to position actions and position analysis. Okay, but as I'm tracking this position in the portfolio, as Doug mentioned, what happened? Well, if I wanted to be assigned on this position and earn that 2.8% return in 17 days, well, that's looked like what has happened here. So now I want to reflect this in the portfolio. The best proper way to close an in-the-money covered call at expiration. If I left this alone through today at 4:00 p.m. Eastern Time, made no adjustments, did not roll it, Doug, my action would be to go to Position Actions. Oh, I'm sorry. I'll click it from the option itself. You've got to click it from the option. Terrible on my part. And I didn't roll the leg. The leg didn't expire. The leg was assigned. I want to record that I was assigned at $72, kept the premium of 165, so the total return of 2.8% was realized, and this position will no longer be in my portfolio. When I click exercise assigned leg, it takes me to a field, just shows me originally what I made. I don't want to change the price here. You can't anyway. I am in the Fortinet stock. It's going to be assigned for me at 72. So all I have to do is click submit. Now what happened? Where did my position go? Well, I see that I have the return of 1.2% total. I now have a new cash on hand of $65,796. That reflects the profit, the 2.8% return on the Fortinet covered call position that was just assigned. But overall, that's only 1.2% of the total portfolio. Smaller position size, only 400 shares of the $70 stock, although that was about a third of the total portfolio value. Now, where's the position? Where can I find it? Well, I can now look under the other portfolio tools, analysis by symbol. Now, this is for the radioactive, but you can see here, closed positions are highlighted in white, Rolled or adjusted positions also. Open positions in that portfolio are in red, but we want to go to July 7th. And there's the total value of the Fortinet position, 2.8% total of the investment into the Fortinet trade, which reflected 1.2% in my total portfolio. The portfolio view only tracks open positions. Once you close, roll, or adjust a position, the closed leg or the closed position will appear in analysis by symbol or analysis by position. You'll also see a view of it in the transactions field. The transactions field, Ernie, is designed to be more of something to help with taxes, the open and close, sale price of the stock, original cost to open the position, option premium received, and total gain or loss on the option leg and the stock legs as well. But to me, an easier view is analysis by symbol or analysis by position. What is the difference between the two views here? Well, originally we had this analysis by symbol. And this gives me exactly what I want for the Fortinet covered call. And if I had 10 or 15 other covered calls here that I closed, rolled, or adjusted, ones that were still open, I'd see all of the different values, as we saw in the radioactive trading portfolio, completely closed positions, open positions with closed legs. This is just for 2023. There's the Fortinet trade that I mentioned. It's currently up 8% on the trade there in 3.5, just about 3 months, a little bit over 3 month time period. So I'm hitting my goals of 1.5% per month for the Fortinet, really exceeding it. It's over 2% per month. But in any case, ASO is down, of course. That's been a big drop. NEM's at 5.2%. Now the Schwab position, that was a loss, but the stock fell over 35%, 31%, excuse me. We only took a 5% loss with a married put structure. I still call that a win. Now, I'm sorry, the difference here is that we had a lot of customers ask us, I'm trading a covered call on Apple, but I've also been doing iron condors on Apple to supplement income, or SPY. And I have, might have a covered call or married put on SPY or a collar, and I'm doing credit spreads or iron condors on SPY. And the analysis by symbol, what you'd see is any position, whether it was part of that covered call, part of that married put, part of that collar, part of the iron condors, part of a strangle you might be using, all listed under the same one. Some of our subscribers asked us, can we separate that out so that I can see the SPY returns just for what I'm doing in my married put, collar, or covered call versus what I'm seeing for my iron condors and debit spreads? And that's what the analysis by position came in. This looks the exact same as what we just saw. Let's go to long calls, Anna. There we go. So instead of having everything linked together, these are all separate individual positions on Annette, whether it was a spread, whether it was a covered call, whether it was a married put. These are two different married put positions. So I could see the gain or loss on each one. Even though I'm using the same underlying security, I'm using different strategies in that security to play those levels. And so that we can see here how that's subtly different. The analysis by position, if you're doing multiple strategies inside a symbol, if I enter an iron condor, a long strangle, and a married put, all in the same security, the analysis by symbol would have them listed all as one. Analysis by position, oh, wrong trigger. Analysis by position would show me each individual trade entry marked by strategy, essentially creating a position code that would track that. So that's just a review of basics of the portfolio, from setup to tracking, setting an alert. The one thing we didn't do, which I'm going to cover again real quick, let's go back. We did touch upon this last week, or 2 weeks ago. You saw that in the recently posted content about how to roll a covered call without breaking the bank. Let's just do 200 shares this time of Fortinet again from June 20th. Price per share was $71.66 at the close. We would have sold the 7th of July, 72 strike. Midpoint was 165 at that time. And of course, let's just keep everything simple in 620. Again, I'm not going to do the alert process. We're just going to follow this. As I'm getting close to expiration, I know we're past expiration, but as I was getting near expiration day, I decided I wanted to hold Fortinet, or I wanted to roll this call, because I thought there was more upside to this position, I wanted to continue the trade. I picked a winner. I want to stay with the winner. As you're tracking the positions in the portfolio, we mentioned that you could set the alerts. But now if, hey, something went against me or something went in the direction I wanted, again, I'm going to go to that position actions menu, and I'm going to go to position analysis. The position analysis gives us an initial breakdown of our position, where we stand right now. Of course, the time value and price is essentially 0. With an hour or 2 hours to go, or this morning, it might have still been at 0.4, 0.5% with the in-the-money covered call with a few hours to go to expiration. Okay, that's all well and good. I see here that I'm well in the money. I'm going to be expected to be assigned at 72 unless I take any action. I scroll down below and we see what I mentioned we could have seen on the PowerOptions portfolio using that stock analysis tab for those extra 6 columns there for the original position value and expected return of 2.8%. Current liquidation value, well, we're even now because we're past expiration, and the future expiration value if the stock stays at the same price. And you can click on details there to see the requirements. Why is this important and why is that important there? Again, as I mentioned, especially in a covered call, Doug, if I'm looking to roll or close a position and on Wednesday or Thursday the stock was at 75.10 or 75.20, and I see here that my liquidation value is 2.7% with 2 days remaining to expiration, and I'm at 90% of the max expected profit, I might want to just liquidate the position 2 days early rather than take assignment, get near the maximum profit I wanted, free up the capital, and look to open new trades. But again, hey, 2 days to go, why not forfeit one commission, just let assignment occur if that was my goal. Now, down below, we have our rollout opportunities. So it gives us a breakdown of our current buyback cost of the option at 268. We originally received a net credit of 165. So just to close this option alone, we're looking at a debit of 103. But now we see what we could get for new credits for rolling up to the 14th of July, 74, 74.50. Okay, we get $1.18. That would cover the 103 debit. Why are these highlighted here in blue? Because they're still slightly in the money. The ones in white are the out of the money ones. So if I want to stay out of the money, give myself a little bit more breathing room and increase my potential return if assigned, I might want to look here for something that gives me a total adjusted net credit. This column here, adjusted net credit, that is a positive value. So we could have rolled to the 14th of July, 75 call and got 93 cents. But that's a total debit on the position of 10 cents. Take in 165, pay back 268. So we're down that 103. We only got 93 cents back. If assigned at 75, this would give us a 4.5% return, however, compared to the 2.8%. Another 1.7% gain in return for 7 days. That's pretty decent and pretty reasonable if my expectation the stock's still going to continue up. But I can scroll down further and say, hey, if I want to roll for a credit, I can go here to the 75, call it 138, 35 cents of net credit. I can go 21 days out and get an 83-cent net credit, receiving a new adjusted premium of 185 for that new call, increasing the return to 5.9%. Or if I want to give myself more breathing room, a smaller adjusted net credit for all 3 transactions, selling the initial call, buying it back, selling the new 28th of July, 76 call, 21 days away. Only a 40-cent net credit, adjusted net credit, but an increased return from 2.8 to 6.7%, so 3.9% for an additional 21 days. That's a pretty good return too if Fortinet continues to move up and hit $76. Always great to see things numerically. But as I'm looking at my rollout opportunities, I can click the more information button from one that I'm interested in, go to simulate trade, and now I can see a side-by-side comparison. My original position on the left in red, if I took assignment, made that 2.8% return, compared to if I make the adjustment by buying to close my 72 call at 268, selling a 28th of July 76 call for 143. If the stock continues to move up and is above 76 in 21 days, we'd make the 6.7%. Now, if I decided to do this transaction, I could simply submit the change to portfolio. Most likely, I'm going to go to my broker. I'm going to enter in to try to get these midpoints here to buy to close this call at, buy to close this call at 268, sell to open this call at 143. Maybe I get filled at slightly different prices. So that's when, Doug, we'd go back to our portfolio, click the more information button next to the option, go to position actions and roll leg. And so we have the buy to close, it was at 268. We saw at midpoint prices. We have the 72 call, of course, and Fortinet is at 74.68. So let's say when we did pull this trigger on this trade, let's say that we got filled at 285, and we're going to sell that 21 days out, 76 call, midpoint of 143. So let's say we only got 140. That's okay. We're still at a positive premium. Bid-ask spread fluctuations, fighting with the market maker, whether it's electronic. Then we'll go ahead and submit the trade. Now I've got my new covered call in the position, and I have this new effective cost per share of 72.86. Why? Now, the reason why is that overall I did roll for an adjusted net credit, but I didn't roll for an exact credit, meaning if my buyback cost was 268, 270, I didn't sell the new call for 270, I sold it for 145. So the combination of the initial 165 I collected and the 145 put us at 310. However, that is going to increase the cost basis, but we're still going to increase the potential return on the trade if the stock is trading above our strike price at expiration. And as I mentioned before, what happened to that call we just closed? Where is the evidence of that? Well, it's reflected. The gain or loss on any calls or adjustments you make on the underlying stock or an underlying call position in a calendar call spread or other structure will be reflected in the effective cost per share. But it's a closed transaction. The portfolio view only shows the open transactions. So once again, if we go to analysis by position, and we go to, our July 7th presentation, there's the Fortinet position we closed for Doug using the exercise assign feature for proper way to calculate or record, my apologies, being assigned. And here is our new covered call position. We took a loss of 240 on that initial sold call, but generated another 280 in premium to sell to open the July 76 premium. We're still at a profit of 2.4% if we liquidated, everything right now, but we're going to hold on to this, see what happens within the next 21 days. But all of it's accounted for, and if I record dividends in the portfolio, that's also going to be reflected here as well and reflected in the total return for married puts or covered calls, collar spreads, anything along those lines. All right. So once again, that's a review of the portfolio from setup, trade entry, setting alerts, using the more information button to exercise, assign, roll, or even expire the leg if the call did expire, Doug. And then, of course, where to see and view the different positions as you keep closing, rolling, and adjusting trades. What is the open positions versus the closed positions? Why don't you see the closed positions in the portfolio? That's reflected in your effective cost per share, but you can always view the running total in analysis by position or analysis by symbol. Remember, at any time, if you're just getting started off, or even if you're a subscriber and you need a refresher or a walkthrough, just click the help videos up here in the upper right-hand corner. Portfolio setup, entering a new position, alert setup, position analysis, simulating rollout opportunities, and historical trade entry as well. Just some of the ways that you can view the portfolio. Of course, I mentioned I like to use the stock analysis for my multi-leg strategies to see these extra 6 columns over here on the right. The standard view just gives you the individual legs. Doesn't give you that linked position. But then, of course, you also have the option to check out the Greeks view. If you have multiple positions, you have a running total of your delta, gamma, theta, position theta, vega, rho, position delta, based on the contract size. Important dates, earnings coming up, ex-dividend date, last dividend, annualized dividend. You could also remember set an alert to be notified if you're within 5 to 10 days to earnings for a married put, longer term covered call trade, etc. Options details, hey, just breakdowns of some of those things. How far in the money? What is the probability of being assigned? This is our 76 call, remember, for 21 days out. Current volatility and applied volatility range, a remaining time value on the option, and extrinsic value as well. So there's some different research there, but you can always go to the full research for the option here, using that more information button, going to the research, stock research, or call or put research as well. All right. So that wraps up a little bit on the portfolio. It actually wraps up a lot on the portfolio, Doug. So great question. Allows us to showcase a lot of features in the portfolio, the power of the rollout opportunities, and much, much more.